We have Brock Holliman here today, and you can find what he's up to by going to his website. So head over to mynewrental.com/invest. And if you're watching us on YouTube, you can see that at the bottom of your screen. However, I will also make that as a clickable link in the show notes. And we're going to be talking about some built up turnkey properties here today, particularly, I believe you're in Florida, right, Brock?
Yes,
But
sir.
this would be an interesting conversation because you got three businesses kind of going on right now. Can you kind of give everybody that elevator pitch, that summary of what you got going on?
Yeah, for sure. So I like to keep things simple, especially with multiple businesses. They all need to work and jive together. So they all work hand in hand. So the first business that kind of feeds the other two is Brock One, or Brock Homes, as you might see a branding as, which that is our construction company. So fully licensed in-house contractors here in the state of Florida. We build in Central Florida and in South Florida, and we only focus on areas that can produce cash flow, which those areas it's becoming, every day it's harder to find. But we've really focused on a few different little spots here where you've got variety of spot lots that we'll go in and we'll buy the land, we'll build new construction, modern, beautiful houses, which, if you go to that website, you'll see, go to mynewrental.com and you can see the type of product we put up. It is truly unique. And I'm not just saying that because I designed it or it's my product, but it's one of a kind type of rental property out there. We build in these different areas right next to a lot of different national builders. So we've got model homes and offices that really kind of, it sets us apart. They're not only a sales center because we do very little retail sales. We primarily work with investors. It also doubles down as a leasing office. So like right now, I just left my office. It's a couple minutes away, and we've got people in there doing applications and ready to move in properties like it's an apartment office. So that's the first business of building new homes. The second business is My New Rental, which is our real estate brokerage. I'm the licensed broker there, and we also, like, our main focus with that is to work with investors and also to use it as a property management company. That's why it was created. So we could be a real estate brokerage per se, but it's sort of a requirement to get our property management company going. So we always have self-managed our own investments, and then we have a lot of investor clients that have had troubles with their property management companies, and they loved how we worked as contractors in constructing their new homes. So they were begging for a couple of years, oh, will you please be the manager? And I just didn't want to do it until we had everything in place and really kind of learned it out on our own properties so we didn't cost our investors any money or headaches. I feel like we finally, perfected that enough to bring that out and do a better job than the other people that were managing properties for everybody. So now we're a year and a half in on that company. So we've got, a couple hundred different owners that are with us and like 250 properties, give or take, that we have under management with that company. And we're growing every day. The third business, which is my favorite one, is Holliman Capital Group. So that is really just an investment company. So if it was up to me, my addiction, I'm a drug addict when it comes to these rental properties. So if I can keep as many of them as possible, that's what I want to do. But of course, we're not like a publicly traded anywhere close to that. We don't raise a lot of funds from outside investors, to do our projects. So we have to sell some. And we much rather would work with investors. So that's why 95% of our product is sold to investors, mom and pop investors that, will never really even see the property. They'll come down and visit and check out our office and, do drive-bys and all that. But that's our main client base. But yeah, those are our three little businesses we've got here in Florida, and they all work hand in hand with each other.
Well, it's interesting. You pointed one particular business that happens to be your favorite. That sounds like choosing your favorite kid.
Yeah, well, don't tell the other two businesses I said that. But yeah, I can't help myself. I just, I'm in love with the rental game, everything that it offers, and I love the cash flow side of the business.
Well, it's interesting because when we've had other people on the show, it seems like as they niche down, that's when they start to find success. You find gold in the riches in the niches, if you
Mhm.
will. You're spread out quite a bit. Did you start off in those niches, or you still feel like you're in the niches to find your riches, or how is that looking?
No, I feel like we found our niche, but the problem is like real estate is a very trendy business. So you get periods of time where certain niches will bring you riches a lot easier than it will different times. And I'll tell you, like I've always been in the real estate game ever since I was in high school. So it was like it started off with foreclosure auctions. That was my initial niche. But at the same time, we were in the Great Depression of our lifetime. So that was what I felt like that would drive the most income, and really that was the main way to do business in real estate at the time was dealing with foreclosures and bank owned properties. Then as you learn a little bit, then you start to do a little rehab. But at the time, you couldn't build anything. It cost you more to build a product than it did to that you could sell something because of the amount of inventory on the market, and there was just an enormous amount of vacant properties, as you remember. I mean, but as time kind of went and those properties got absorbed by different investment companies or funds or investors or retail buyers or whatever, the inventory dried up and prices began to come up, and to the point where now we need more inventory. So that meant building was it was time to switch to building again. My father was always a construction guy. He always built. So when that happened, I had a couple investment companies that I was selling, my foreclosed properties to, and I called my dad up. I said, "Look, we can sell these guys some new houses, and I just, I'll put the deals together, and I'll be your little worker. You just point your finger. I'll sweep the floors and I'll do whatever I need to do. Clean the streets. I just want to learn how to build a house." So we did 3 deals. I learned how to build from there, and ever since then, building has been becoming more and more of a role in sort of what we do. Now, if the times change, then my niche will probably change on that form. But however, that's why I'm so addicted and I love that last business so much, is because really that's an investment company with real estate, and as long as the numbers work with real estate, that niche will always be around in my mind. So it's like I would love if everything was brand new that we built, because I know what kind of product that is. But if times change again, then we're fully prepared to go out and purchase existing deals that we didn't construct ourselves. So I don't know if I rambled on too much there.
No, of course not. It is with the fluctuation in pricing when it comes to building material, especially during COVID, things kind of got a little out of hand. Have you found some of those variables starting to get under control?
Yes, yes, and at the same time, there's cracks that can concern you from a builder standpoint in today's market. I don't see them becoming a major issue, but yeah, there's no doubt. Like from 2020 to 2021, building materials. I mean, a few of the line items doubled and tripled, and it made it very difficult for a lot of builders. And even though prices were just skyrocketing, I still know people in this hottest state that went under during that time because they weren't thinking properly. We've never, first of all, I've always been very confident in anything that we need to sell. And number two, I'm very confident in what we build and where we build it, and that I would keep it if I needed to, or I really would like to. So therefore, it's not like I went out and, if we had all of our inventory being built, and at the time pre-COVID, say that the values were 225,000, I did not go out and go under contract with buyers on all the product. We don't even release it until the very end, which we have a very fast build time, which kind of helped us out there too. But I know a lot of other builders that would go under contract with a $225,000 house, and nowadays you can't even build anything. You can't even be in anything for less than, in Florida, probably like $260,000, and those are our cheapest areas, and it really put a lot of people in bad situations because they were under contract to deliver. Some people I know 300 houses at prices, and every one of them that they had to deliver would be at a loss. So they had to deliver a lot of those and then go out of business and stuff like that. They didn't have escalation clauses, or maybe they weren't staying on top of the budgets during the whole time, so they didn't update pricing. But that really made it very difficult for a lot of different builders. It definitely made it difficult for us, just not in that same aspect, because we weren't going under contract on everything, as like a pre-sale. But now here we are in 2024. None of the building material prices have come down, except for the exception of lumber. I mean, lumber is it's a commodity that's traded. I mean, yeah, you got some metals being traded, but metals are at an all-time high now. So we're talking, electrical wiring, steel, and rebar, which is huge when you're building concrete houses here. Like, those prices have come up quite a bit. We've got a lot of other things that have come up. Shingles have come up, roofing materials, because oil's up. You got to make that with oil. Every other building material has to be delivered to the job on a big diesel truck. So we get fuel surcharges, all these different things. And still now we're at a point where prices have sort of hit a ceiling, or maybe even come down just a tad due to interest rates. And we're still getting price increases on our materials. And now you're to the point where the workers always get screwed. They're always the last ones to get a price increase. It's going to come the materials, then the workers come later. Now we've got labor prices going up as well, and home prices and our margins are just becoming more thin. So that is difficult, especially if you're not staying on top of your numbers and your budgets.
So can you kind of give us a snapshot of the current situation then? When you're building these build to rent properties, are you looking at 260,000, or what are those prices at this point?
Yeah. So that's going to be closer to our Central Florida, because it's cheaper to build in Central Florida. You still have a lot of different, codes that are going to be storm related to the tropics. However, in Florida, the closer you get to each coast, the more you have to beef up your engineering and your building products. So yeah, in Central Florida, we're somewhere around that number. And that's going to be that's your all-in cost as a builder. So then you got to factor in, on top of that, you've got a sales price that should take care of the commissions, that should take care of the title, the closing costs, and any other expenses that are due with the transfer of real estate on a sale. And it eats up a lot of that margin. So there's not a whole lot left. And, it makes it difficult in these areas. However, when we get closer to the coast, our prices increase as far as what it costs us to produce by, 10 to 12% at a minimum, which, does make it a little bit more difficult. But at the same time, prices are a little bit more elevated. Rents are higher over here. And it seems to be, maybe a little bit more desirable from a retail standpoint at this time, and from an investor standpoint for sure. I mean, a lot of people, when they think Florida, they think South Florida is where they're going to think the most appreciation and growth and desirability. But yeah, those are our all-in costs right about now. And we're doing it in-house. It's not like we're hiring, a builder to do this and then add their fee on and all that stuff. So this is our true cost.
So what could people expect as rent then, or returns, when you're buying a property that it sounds like it could close, 260 plus?
Yeah. So when we're talking return rates, so right now with an all cash return is going to be somewhere around in the mid sixes. So around a 6.5% return, which doesn't sound that sexy in today's market, because I know you can go out and buy, a treasury bond and all that, but you got to think you're not getting the benefits that you're going to get off of this type of an investment. I mean, you got tax benefits. We've got, cash flow, albeit it's not as much as it should be or a couple years ago. But you add enough time to any real estate scenario, as long as you pick the right property in the right location, then it should be a no lose situation. Obviously, there's always a chance. There's always that scenario. But if you add enough time, it's everything should play out. So what I mean by that right now, we had enough time right now. We are all hoping and praying for lower interest rates, and not that we want to wish harm or inflation on any of the consumers out there, but rents have I know they ran up big time for a couple of years, but they've plateaued and even come down a little bit off the peaks of a year and a half ago. And now I feel like we've and not like we've crashed in rental prices, but we did come off of the peaks, and I feel like we've hit a bottom on that. And does that mean I think we're bouncing up and going higher from here immediately? No, I don't think that. But I do think we've hit a bottom. I don't see us coming down unless there's a big economic driver that can, prove otherwise. A lot of unemployment or layoffs or something like that could always make prices come down. But, I feel like we're sort of stable, especially in our markets, and being in this wonderful state of Florida that I know has been on absolute fire, which maybe scares some people. But, I feel very comfortable in these areas that we're in.
Well, I would imagine that people are going to expect a slightly lower return on your investment when you're talking about a brand new building. It is kind of one of those things that as real estate investors, we know this game. If you want the higher returns, at least when you're kicking things off, you're dealing with something that is usually a lot older, a lot more in disrepair, and you're buying those discounts. You're buying those properties at a discount because of those reasons. So, you're dealing with distressed properties at that point.
Absolutely, and maybe even like C or D areas, and we are in my opinion, we are in A and B areas. Oh, maybe A minus. I mean, we're not like in the hottest areas of Orlando or Tampa or Sarasota. I mean, we're in these outlying areas. There's plenty of action going on, and very very family friendly areas. No, very little to no crime in these areas. I mean, so in my mind, they're really good areas. And yeah, like you said, when you look for these higher returns, you are sacrificing a lot of those things. And my average repair bill across over 100 properties that we have here that I own, on the older ones, the included, it's like $3 or $2.81 or $3.81 a month on average, which is it's extremely it's hard to find, but it's because they're brand new. And when you look at a pro forma, yeah, you look at those older properties, or you look at something like you were just talking about, the numbers are going to look pretty much too good to be true on any pro forma for something like that. The good thing with new construction is it's very predictable. You know what you're dealing with number wise, and you should not have any. You will not have any unexpected repairs. So that's all a big plus. Plus, I feel like the appreciation play comes into play a lot easier and better to predict when you're dealing with new construction too. A lot of the reason because we're dealing with other builders too, and the pricing on the materials and the labor and every day it costs more to build the same house than it did yesterday.
Just to remind everybody, head over to mynewrental.com/invest to learn a little bit more. And if you found some value in what we're talking about so far, please do us a quick favor, like and subscribe to this episode if you're watching on YouTube, or share it with one of your real estate investing friends. So, Brock, be curious then, it sounds like, based on everything, especially with the new properties, you got into the management game. Was that out of I'm always interested on this, because more times than not, it seems like people who add management to their company list, it's because all of the property managers they worked with prior to this, just the interests were never aligned, and you were just trying to fill a need.
1,000%. So when we started here in Florida, we were selling to investors, and we were partnered up with a network that was bringing us investors that wanted to buy property, and that network had also teamed up with another property management company. And I'm big on numbers. I would never have bought a lot and started one house in any of these areas had I not penciled out rental income and making that pro forma work. And I spent a lot of time on that. I'm very accurate, very realistic when it comes to coming up with a rental range for how much these properties will lease for. And I see a lot of different providers out there, especially with build to rent, that if the property is only going to bring in $2,400 or $2,500 a month rent, they have no problem telling you it'll bring you $2,850 to $3,000. They have no problem. And it's like, it's up to you to do your own research. When I quote rental rates and we sell product and I go out and do a webinar or I, promote it and I tell them this is what we're getting for this. And then you got a management company that comes in extremely lackadaisically and all they really care about is getting that property leased up ASAP and getting their 75% lease fee and then getting their cash flow on repeat from collecting rent every month. The interests don't align very well. So, back then I remember the first set of houses we started, for example, $1,700 a month is what I said they would rent for. And then they come in and they tell everybody after they have already closed. You can imagine how this would piss off some investors. Oh no, this will only get $1,495 or $1,550. And that's a big deal. And it makes me look like somebody that's trying to fudge numbers to get a sale, which is just totally inaccurate. And then when I've got my own rentals coming out of the ground too, and I'm seeing me get 1,700, I'm like, there's no way in hell I would ever want to hand over the keys to my investments to somebody like that. So I've got to self-manage my own properties. And I started doing property management when I was 18 for a couple investors back in Memphis. So it was really just taking that along with any mistakes and then trying to do this better for my own properties. And I know what we're capable of as a management team because I wouldn't let my properties go to anybody else. So now I felt comfortable, opening this up to the other investors and to the public so we can really pull through on what we say that can happen. And then one more point on that is just that the fact that we've got a construction company and we keep records on every material that's used in these homes, paint colors, the faucets, anything. It makes it a hell of a lot easier, on the investor and in the investor's pocket when it comes to unit turnover or anything like that. So, and we've already got the vendors and the subcontractors in place that we give a lot of business to that, come in there and give us nice price breaks. So that's all, why I think they work very well hand in hand together.
Mm-hmm. No, it sounds like everything is very complementary, and you must have a heck of a team behind the scenes keeping things documented and orderly like this.
Yeah, we've got everything is very systematized from the way that we purchase a lot to the way that the transactions input into our system to the way that we release and do building permits and color schemes to the way that we track our software or our scheduling software with the project managers. And they've got an assistant in the office that helps with ordering and the scheduling and all these type of things and documents. And then we have our property management team sit in on our weekly meeting, which was, we do that every Thursday. It's 1-2 hour meeting. We go over every new build that's going in the pipeline. We give a new build update. When we get to a certain point, the leasing team knows that it's time to start advertising the property so that, more than likely we will have a tenant ready to move in as soon as we've got the CO and we're ready to, we got a certificate of occupancy on the build. So, and we can't do any of this if we're unorganized. And I know anybody, if they come in here, you can find a little bit of chaos, but we try every day to organize that even better.
I imagine you're working with a number of investors around the country then. I'd be curious, how many people actually fly down, check out your facilities, and check you out in person?
You would think it would be a high percentage. If it was me, I'm a very hands-on type of guy, which is probably why I like having all this stuff going on. And it would kill me to be a passive type investor. But we've got a very low percentage. If I had to put a number on it, I would say less than 5% of the people that actually come here and want to see the product before they go under contract. Now, the amount of people that come down here after the closing, which I think that might be a little bit different, we're probably at 50% that actually come down and want to see the property, but all they can do at that point is do a drive-by and then come in and meet everybody that they've met over the phone, just face to face, and sort of see, how we operate in person. Mm-hmm. That's close to 50% on that, but very low.
Right. I've talked to some turnkey providers in the past, and there's been a couple times where it's almost discouraged. Like they're afraid that you're going to show up.
I'm definitely not afraid of them showing up. It's not, if they want to show up, we would love to have them. Because we're very confident in what we do. And I think that anybody over the phone that we've done business with, once they do show up, I think they're even more impressed with what's going on here. So I mean, anybody that buys off of us, I totally encourage it. And I tell them, look, I can't wait for you to come down. Let us know when you're coming. If you're ever coming down here, going to Disney World, if you're going to the beach or whatever, if you find yourself in the Sunshine State, please let me know so we can, schedule something that you can come spend a day with us, or a couple hours or whatever you can, meet our team.
Sure. Well, for those people who are considering a build to rent property, what are some of the questions they should be asking of their provider to make sure it's a good fit and that person is reputable?
I would say, let's figure out what kind of specs are actually going in the home, and don't just rely on photos. Like everything, whether you're buying from me or anybody else, that needs to be a part of the contract, because that's very important. I mean, we build our houses very tenant resilient, in a very tenant resilient way. So we have no carpet in our homes. We do 100% concrete block, which you might find a lot of other build to rent people, especially in Florida, that'll cut corners on that, and they'll build a wood house, even if it's passing hurricane codes. I mean, there's a lot of other factors here on why I would never want a wood home as an investment in Florida. I mean, you've got bugs, you've got termites, you've got high winds, you've got you name it. And you really, we cut no corners on that. When it comes to some other things that we do in our houses, like we have all solid wood cabinets, we put in higher ceilings, all LED lighting, quartz countertops, which are super durable. And I'm mentioning all this because it would add up if you start to add a timeline of expenses on these investments over the course of 10, 15, 20 years. We're talking saving, tens of thousands of dollars over unit terms because of these things that we do. Another one big thing that we do to our products is when we're closer to the coast, like I was talking earlier, you've got the option to either put in, hurricane shutters and your regular windows, or you can put in high impact hurricane proof windows and doors, which is what we choose to do. Any of the other builders, even retail around here, they all are going to put up hurricane shutters. It's hard to find housing, in this price range that you're going to see these windows and doors in. But we're thinking scalable. We're thinking, you can't trust every tenant. Even though we've got a storm coming, we send a lot of alerts out. Hey, storm, we're in the cone. This is coming. Blah, blah, blah. Secure the doors, put your shutters on or whatever. We don't want to have to worry about the shutter part, because likely they're not going to put them up. And we don't want to call our owners up, or I don't want any of my properties, to say, okay, we had a tenant's, lawn furniture fly through the window. We got to replace a window now. Now we got to get, we have a couple $1,000 repair bill out of the blue. Same with our shingles. I mean, we use a highly upgraded shingle. It's not just a regular architectural shingle, even though it looks the same. These shingles are supposed to go up to 165 mile per hour wind. So these are big things. If I'm warning other investors what to look out for from build to rent people, or any builders in general, really show me the money. Like, what does your past work look like? Give me some examples. Maybe even ask for some other investors so you can interview them and see how their experience was, because we have gotten so much. Our number one source of business is repeat. So people that worked with us, they realize that what we said is the truth. We don't blow any smoke, and all we do is do what we say we're going to do. And these people really appreciate that. And it's why we have so much repeat business. On top of that, I'd say our second flow is from people that have dealt with bad experiences, and that we're helping them get out of a hole that they almost got into with some other builders. Starting lying, talking about permits that are still in there for 6 months. Just you name it, they do it. Price escalations at the very end when it comes to handing over the CO and closing out the deal. I mean, we just don't mess around like that. So we scoop up a lot of business from people that have been burnt from other builders.
Remind everyone one more time, mynewrental.com/invest to learn more about what Brock and his team is up to. And if you want to connect with him there to see if this would be a good fit for you. So, Brock, before we switch into the rapid fire questions, is there a question or concept you think we should have tried to cover here today?
Boy, not off the top of my head. No, I don't. I think we've kind of covered our little base here. But if you've got anything that you think I can speak to,
Well, let's jump into the rapid fire questions, and maybe that'll spur a little bit more. But again, it's mynewrental.com/invest. That's going to be a clickable link in the show notes. But if you're ready, Brock, we'll jump into the rapid fires.
hit me.
What lie do real estate investors tell themselves and sometimes to others?
I'd say the biggest lie that real estate investors might, and especially newer ones, excited ones, will be, oh, it'll rent for this, and oh no, these repairs won't be due, when they start to run their numbers and they really fall in love with a deal that they shouldn't. A deal needs to check every box, and a lot of newbies might say, because they just want to get that first deal, or they're dying to get into the action or something, they'll fudge the data and lie about the own data that they're looking at just to make the deal work so they can get going. And I think it's extremely important to, if the numbers don't pan out, if they don't underwrite to what your criteria is, there's no need to try to bend something. There's so many deals out there that you just got to keep looking for something that checks all the boxes and tells the truth to you, so you don't have to lie about the numbers for it. So,
do you have a book recommendation, or what are you reading right now?
Yeah, so I'll tell you, I read the 10X rule probably 6 times a year. Anytime I'm feeling like I'm losing my energy or losing my fire, that book it throws me into high gear like that. So that's one big one. I also, part of that same family or organization, because that's by the Grant Cardone, who I love his energy. And I know a lot of people out there maybe don't agree with some of the stuff, and I mean, maybe even including me on some of the stuff. But I'll tell you, the energy that guy brings and the fire that he lights under me just by these books and by the free content is unmatched. There's another book that I just finished that was 9-Figure Mindset. That really helped me out. I've been on a little bit of a firing spree ever since I read that book, because it also lit a fire under me to weed out some of the things that were maybe minds don't align in the organization, to try to better the organization. And maybe sometimes it's stressful to do that, but I think it's important to keep the company and everybody in it aligned with their visions, so everybody can grow as a unit.
Sure.
Those are two book recommendations. I know you asked for one, Jack.
No, that's great. If you could go back in time and give your younger self one piece of advice, what would that be?
Yeah, that would be, don't give up when you think that you've made it. So I remember, went from having a lawn mowing business when I was a kid, and saved up as much money as I could. And that afforded me to buy my first house in Memphis, which was a foreclosure house, for $7,200. And I remember selling it for $34,000 after I had a tenant in there for a year. And, I felt rich, right? And sort of, because I've never felt that kind of money before or anything. So, and then it happened 2 other times. And each time that happened, I sort of let my foot off the gas in a way, like, oh, okay, I feel like I've made it, even though I hadn't made it anything compared to what you need to make. And it maybe let my guard down. And that was probably the most costly mistake that I've made. And it's happened over and over, but it won't happen again. So now it's just, don't let up. Like, just keep figuring out and doing those same actions that you did to get the first score, and making the next score come as fast as possible.
Sure. What single strategy, process, or tool have you implemented that has had the biggest time-saving impact to your business?
I would say, and it's fun, but it's at the same time miserable to create, because I've been the brains behind it, which I'm not what you would call a tech guy, but however, I had to learn how to be one to make this stuff happen, is building systems. And these systems based off of, and I tried so many different types of software. Now I found the one that I'm in love with. It's pricey, but at the same time, I think it allows us to grow as organizations. It allows all the companies to sort of talk to each other and let updates flow. It lets you put in automations and really take a lot of these tasks out that would waste a lot of time and make things come a lot more streamlined, more, real processes like real companies would have in. And that was just building our system up on Salesforce. So, all of our organizations they work some sort of fashion on Salesforce. And our management company, we've got another software for that. We use Appfolio, and then we have all different types of software, but Salesforce is our main engine. So,
sure. Well, Brock, this has been a great conversation. You brought a lot of value to my listeners here. One last time, you could learn more about Brock's team by going to mynewrental.com/invest. But it was great to meet you, and I hope you'll come back again sometime.
You too, Jack. Anytime you want me back, I'd love to come back.